everybody, welcome. It's Mike Smith here from Hawkeye Options. We're going to have a look at Delta Airlines. We've got a number of stocks that are looking as though they are under a little bit of selling pressure. Delta's no exception. In fact, right across the transport sector, things are looking exceedingly weak. You look at the cars, it's the same picture. And of course, the S&P 500 had another pretty dreadful day yesterday, and certainly looks as though it's going to retest some key levels if we've got more selling. We'll have a look at Delta for now, and we see across the daily chart probably the most significant move that we've had for some time. We've got a break of around about 41, which is a key level in the short term. You see that pivot low there, but really the bigger story is looking at the longer term. You see February, we got close down to 39. That's the key level. Take that back even further to June and July last year. Again, you'll see 39 was the key level. We break through that, and really we are sort of heading towards 35, it looks like. If we take that back a little further, you can see how that line was significant in 2014. So really around this 35 will be the first port of call if it should drop. However, having said all that, the S&P 500 is still an uptrend on the weekly at this stage. So we are entering trades with caution. So there's two ways we could play this. We could either play it with a straight bought put, perhaps at $38, if there's a continuation of the sell, say after the first hour, or we could look at placing a safer credit spread, perhaps a bear call spread, a 41.42 strike, which expires next week, would yield around about 14 or 15 cents for the legs that we've specified. So there'll be a dollar margin associated with that. So if they expire worth it's a return of 15%, which is pretty healthy in this market for anything. That's the way you've got to look at credit spreads. You've got to look at your investment as your margin requirement, and obviously then subsequently see how much premium you can grab whilst keeping it safely away from the action. So because of that pivot low at 41, then that's why we're choosing that 41-42 combination. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and trading service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.